Tax Act and Foreign Exchange Management Act. See this cartoon which is there, it's a very beautifully made. I'll tell you the background. The one who wants more, the customer always wants more. Okay, but there is regulator who says, no, this is not permitted, this is permitted, this is not permitted. And the banker has to have a fine balance between these two. Now let me tell you about the banking, a bank, how the structure of bank is. I have done a certain color coding. These are, a few of them are big silos, like retail banking, wholesale banking and treasury. These three are main profit centers of any bank. And whereas the other ones like operations and technology and compliance, risk, they are all cost centers. But unless these cost centers are there, bank will not be able to function. Now, coming back to retail banking, there are many products or many silos, I can say, which we are operating within. Each one is a department, is a huge department which requires people, processes, and the various products which are under retail banking are assets, various types of loan products. I'll talk about it later. Then branch banking, branch operations, business banking, home banking, or alternate channels like e-banking, telephone banking, mobile banking. Then dealing in gold, silver, bullion, and there are other products which bank is collecting like liabilities. These are main sources of funds for bank. So what we get funds from is CASA. CASA is current account and savings account, and term deposits, through which we raise our deposits and use it for lending it to our customers. Then there is marketing, then demat, mutual funds, like third party products we do. Then business intelligence unit and all, they give inputs to how the bank, about the entire functions of the bank. Now I move over to corporate banking. In corporate banking, typically we deal with most of the corporate accounts. The corporate accounts, it starts from individual proprietorship firm to a large, huge public limited company. So again, there also we have divided into various silos, I can say. Corporate banking, SME, small and medium enterprises group, agricultural banking, then financial institutions group, special asset management group, where the account becomes difficult, it requires certain type of nurturing. So that is handled through special asset management, corporate advisory, capital market sale, securities dealing, debt syndication, cash management services, trade services, corporate risk management, and the entire banking moves on is, while as far as lending is concerned, it is all through tight monitoring and credit administration. And third silo, profit center, is treasury. There is domestic treasury and there is forex treasury also. In domestic treasury, there is asset liability committee which decides at what rate should we accept deposits at, what should be the lending rate. These are all done by ALCO. Then for trading in government securities, there are HGL accounts. Then there are correspondent banking channels wherein we don't have branch at particular place. These are all done through our correspondent banking channel. Then interbank exposures are also managed through treasury. Fixed income securities and forex treasury, these are all again different business groups within the treasury, which decides at what rate should we accept these EFC deposit, exchange earner foreign currency accounts, what rate should we accept these FCNR deposits, and what should be the rate of exchange we should communicate to the client, because ultimately it is a profit center. And Nostro and Vostro accounts are also under part of our okay, now these are all basically profit centers of a bank. Now coming back to operations and technology, these are backbone of any banking. So human resource, right from the stage the person is recruited till the time he retires, the entire thing is handled by HR team. Then back office functions for all this branch network which we are having. Then clearing and payment solutions, and basically getting into transaction banking department of a bank is handled by operations and technology department. Then since we have to operate within the compliance which RBI is regulating, the legal and compliance and risk. These are all the main functions of any backbone activity which is done. Then there are corporate accounts and taxation also, and audit. These are basically the cost centers in a bank. Now come to the type of products which we are dealing under are retail banking. Retail banking, I think everyone is familiar. There are assets and there are going to be liability products. Assets are going to be basically from home loan or loan against property or loan against commercial property, vehicle loan, car loans, all sorts of loans, personal loan, educational loans which you must have taken, or credit card, loan against financial assets like shares, mutual funds, fixed deposits of bank, and temporary loans against cash flow mismatches, and leave rate discounting. These are typical products which are sold through branches who are having a retail banking license. Then these branches also raise deposits through opening of various savings accounts and current accounts, and also they are linked to term deposits and recurring deposits. Then documentary collections and NRI accounts are a big source of funds which bank gets. Foreign remittance is also a huge inflow which we have been receiving from our NRI. Then third-party investments are wherein the bank is not selling its own product, it is selling somebody else's product, like a mutual fund or a dematerialized account and insurance product. Through this bank gets fee income. I think everyone whoever I have recruited or have come across, they want to do something in corporate banking. Basically, there are two kind of products which are built through in a corporate banking. They are fund-based products and non-fund-based products. Fund-based is basically cash credit account. Any company wants to go in. I'll come to you. I'll come back to you about the cash credit account in my next slide. Working capital demand loan, short-term loan, or purchase order financing, invoices discounting, sales bill discounting, commercial papers, loan against LCDs like basically letter of credit back bill discounting, then post-shipment credit in foreign currency or pre-shipment credit in foreign currency, export packing credit, foreign bill discounting. These are various, and term loans and rate discounting and loan against shares or promoter funding. These are all products which involve outflow of funds. That's why these are all fund-based products. There are non-fund-based products like letter of credit or bank guarantee, wherein bank is not involving its fund. Based on the letter issued by the bank, the third party issues extends the credit to the customer. And corporate banking liability is the same kind of what we talked about in retail banking. These are there. Apart from this, various collection products are also there under cash management solutions. Okay, corporate salary account is another way of attracting good corporates, and these give stable deposit base for the corporate banking liability business. This is once you are into corporate banking, basically what you should know is about how the balance sheet of the company looks like. Then I request the commerce graduates who are there, they should help the other people in reading the balance sheet, how it reads and what it talks about and how it is made. In bank, what we basically do is while we are lending, we basically classify balance sheet into assets and liabilities, and then there are various formats in one starts filling up, and then you will come to know for various ratios that the ratio analysis goes on, and then you put up the note to the sanctioning authority once it is sanctioned. So the document gets executed and then the disbursement takes place. But basic is you should know, you should be thorough with the balance sheet of a company. And second most important statement is profit and loss account statement. Profit and loss account statement analysis also is done by analyst as also a relationship manager. It basically gives how the company has fared over a period of time. And it also says what is the EBITDA of the company, what is the PAT. So all these terminologies you will come to know once you are sitting with your BCom friends. Then there is cash flow statement also, how the funds have moved during a particular financial year. So these are three pillars of a financial statement. Basically, the profit and loss account, which talks about performance of a company over a period of time. Balance sheet gives a position of financial position as on a particular date. And whereas cash flow statement displays the sources and uses of funds during the period of time. Yeah, this is what I was talking about when I said that I will come back to you about cash credit account. Cash credit account or any operating account is operated in a bank works like this. There are various banking products which can be applied to each and every item of balance sheet or a profit and loss account, and it is the entire chain is routed through the banking cycle. Right? You start sourcing of raw material, there are payment products or there are import collection products which we can do. Then internal labor or contractor, these are all handled through salary accounts or a payment solution can be provided. Finished goods are handled through our collections or exports product. Then duties and taxes can be paid by payment products like RTGS, NEFT or directly issuance of DD checks or by giving extending the bank guarantee to the government departments. Then debtors, the collection, basically cash management collections and export collections, these are handled to, the debtors are handled to these products. Then normal cash, debt servicing and profit distribution. For this, the entire bank channel can be utilized. Having said about how the bank operates, let me talk about India, how are we going to fare, how we have fared. Hats off to Reserve Bank of India's great regulations. We have survived through last year's European debacle and US meltdown which had taken place. Again today there are some bad news, but nevertheless we will overcome through because we are the only economy in the world which is growing at a rate of more than 8%. Each developed country had its own decade. This is after analysis done by some researchers and which was available on Bloomberg. 1960s was America, 1970s belonged to Russia, 80s we had seen all Japanese products, 1990s Korea and Germany they dominated, 2000 to 2010 it is China, and now the story is going to be India. We have a great potential in information services and becoming a large manufacturing basis of most of the global multinational companies. So what's in it for me? What's in it for you all? Ultimately, the huge investments will be coming into our country. So each one of you will be having a great career prospects by the time you are out of your college. Each niche area will be a non-linear growth opportunity. If you identify any small area, there is going to be huge expansion beyond our imagination. Now coming back to when we come for campus recruitment, what all we look into, how this fishing is what we do. We look at basically academics of you, whether the fundas of this guy is clear or not, how are his communication skills, how is his ability to present himself, how is the problem solving aptitude within the constraint given, how are they going to perform in the team, are they competing with each other or will they be collaborating, subject knowledge of your specialized area, ability and willingness to go to any place at a short notice. Then he should be basically a go-getter and performance oriented, whether he is self-motivated or not, how well he is networked, and he should be willing to work with us for at least 3 years.